Hello again, and welcome to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. My name is Randy Cook, and each week, Jay and I sit down here and talk through some of the money stuff that's going on in the news. And boy, there's a lot to talk about with the markets going back and forth and tariffs and all that's going on right now. Jay, how are you doing today?
Great, Randy. How have you been, bud?
I am good. I'm good. I don't know about you, but everybody around me got sick, and then I got sick, and I've had the cold. I guess it's springtime, and then I call somebody and they go, I'm sick too. There's a lot going around right now. I don't know what it is. But we're almost out of school, so maybe the germ pool that is school will be done for just a little while here. All right, so let's talk a little bit about what's going on right now. I mean, the tariff talk and the interest rate talk and all that's going on right now. The Dow in April, as we look back, holy cow. I mean, we were down like, 16% or something like that, and then back up again, and now we're, not doing too bad again. We have had a lot of volatility, as we say.
That's correct. Mm-hmm.
Now, I want to ask you, I saw something in Vanguard, and it said only 8.4% of their investors did anything during this period of time. Buyers far outnumbered sellers. Overall, we didn't panic. This is one of those events where many people did not do a lot. They just said, I'm going to sit on this, and I'm going to wait and see how it all turns out. I know you've told us a story about one of your clients that said, get me out, and it was completely the wrong decision. Yeah. Overall, did you get a lot of calls? How did your clients react? Did they panic? Did they need a shoulder to cry on or a word from you that was reassuring? What was going on with your clients?
Yeah, so, I mean, we've got hundreds of clients, so you're going to get some people that are a little unnerved, expectedly. But, it's the vast minority of people because of the planning we've done on the front end.
Okay.
Right? Because we don't have 100% exposure to the markets and our retirement is tied to the ups and downs of it. We basically, help train people to understand what their plan is, what they're protected from, and why we're implementing things. And it helps in times like this. I got to tell you, I'm not saying that survey is wrong, but it sure felt like there was a lot of more people selling than what they're saying there.
It is so true. It is so true. But at the same time, this is the time when people need their financial advice. They need that person. I mean, when you think about all the different people that you hire for services, I mean, last year had a tree fall on my house, went right through the garage and right through the bathroom and right through the closet. And boy, we had $150,000 worth of damage.
Wow.
I happen to have a tree guy. I needed a guy to come out with a crane and a bunch of guys with chainsaws. And I made that call at 8:00 in the morning and they were there by 10. And so I had that guy during that emergency, during that crisis. And do you have that person during this crisis? I mean, maybe you don't think this is a crisis, but we're probably going to see more of this, aren't we? And to have that person that you can call and say, am I okay? Is my positioning all right? And you to be able to reassure them that it is, that's a good person to have in your life, isn't it?
Yeah. And we've talked about this in the past. I write, a chapter or so on it in my book, Wall Street's Game. And the investment management side of things, the retirement planning side of things, it's something you need to be careful with. There's people that do it themselves, and there's some people that come in and they are do-it-yourselfers. And I tell them, look, you enjoy this, you understand it a lot, you don't mind having to put in basically having a part-time job to manage your investments and do your retirement planning. Keep doing it. I don't think we're a good fit. I think you should keep doing it. Those people that truly understand it are few and far between. Mm-hmm. And the concerning thing about that is, okay, your tree that crashed on your house, all right? If you didn't have that expert in your back pocket, or you said, I don't want to pay this guy to do it, I want to do it myself, you could have gone down to Home Depot or Lowe's and hired a chainsaw if you don't have one and take a shot at it yourself and then screw it up and say, all right, I'll call this guy. and what's the worst case scenario? You spent $50 on renting a chainsaw and some of your time.
Right.
If you screw up your retirement planning there might be no coming back from it. There probably will be no coming back from it.
It's a great point. There's nothing that the guy down at the repair shop loves more is when you come in with a lawnmower and a bunch of oily parts and say, I tried, can you fix it?
Yep, but it's going to be more expensive now.
Yeah, it is, because you probably screwed something up. We don't want that for you. We don't want to make mistakes in retirement. Jay has gone through this hundreds and probably thousands of times. You're going to do it once, and you're going to watch a bunch of other people do it, and chances are that you're probably not going to do it the same way they did. They've got completely different needs than you do, a completely different portfolio, completely different ideas of what retirement is, and you can't really go by what they did. You know, there are people in the world that can do it just fine on buying CDs, but there are other people that can't. So we would love to sit down with you and find out what's possible for you in retirement. Give us a call. Give us a look at our website. Here's our website, retire210.com. retire210.com. Down at the bottom of the page is a place for you to put in a little information, even a box that says, you know, what are you interested in talking about? Is it Social Security, taxes, your 401k? Is it market volatility like we're going through right now? Give us a call. Let's go through that with you. 210-985-6200 is our number, 210-985-6200. Well, let's handle just a couple of things that happened in the news. So just recently, Jerome Powell decided once again to sit on the interest rate decision. They're not going to do that. They're not going to move things up and down. Although President Trump is pushing real hard to move interest rates down, Jerome Powell is just saying, and even at his last meeting, he didn't say, tariffs are going to move us into inflation. Tariffs are going to move us into a recession, or they're going to start stagflation. He didn't say anything like that. He just said, we're going to wait. We're going to sit. Do you think that Jerome Powell is taking the right course with all of this, or do we have a really strong economy, and could he lower interest rates at this point?
Yeah, I got to admit, the economy has hung in there much better than I think a lot of people expected. It really seems a lot of that strength is coming from the labor market. Even, you know, it kind of seems that employers are still reluctant to let go of staff because of the hard time they had during COVID rehiring, right? It sure seems like that. I got to tell you, this is a personal opinion. I think if Trump shut up, he might cut rates. But the more Trump talks about it, the more he's like, nah, that's not going to happen.
Yeah, we got a little bit of this going on, yeah.
I mean, I understand what he's saying, you know, is the truth is he doesn't know what's going to happen with inflation. With these tariffs, you know, I personally, and what I share with clients is, I believe a lot of this is going to be resolved. I think Trump has a very unique style of approaching negotiations, and this is part of it. And, yeah, maybe some of these stick, but a lot of them will get resolved. And so, you know, I'm not too concerned about that inflation side. But first of all, who would want Jerome Powell's job? I sure wouldn't want it right now, right?
No.
And I really believe his concern is, all right, we cut rates and then things don't work out the way that we do, and we've got to backtrack, and then we've got to raise rates again. And that's messy, right? So I got to say, if I were him, I would probably wait a little while and see how everything fleshes out. Labor market seems to be strong.
Yeah.
Economy seems to be chugging along somehow. So why not?
I worry a little bit about what's going to happen over the next 3 to 6 months, because one of the stories that I keep hearing are, you know, like if you were a store owner and you were going to buy your Christmas inventory, you probably did that already. Right. And you placed your orders, and then somewhere along the line, a tariff comes in, and now the price has gone up 145%. And so you cancel your order. So now you're going to have empty shelves. And I keep hearing empty shelves going back to school, and empty shelves at Halloween, and empty shelves at Christmas. Right. That's not going to go well for consumer confidence, and that could put us into a different place.
It could, that's right.
Let's talk a little bit about Warren Buffett here. Warren has decided, you know, we're all wondering if we're going to retire at 65. He's 94, and he's finally retiring, this guy.
Incredible.
It's amazing. He has had such an unbelievable influence on finance. He's been all over financial networks for so many years, and he's kind of been that guy who says, buy the strong companies, buy and hold. You'll be amazed at what happens to you in retirement. And, I know there's some financial advisors that don't believe in buy and hold, but he's sure been an advocate of it, and buying Coke and buying Walgreens and buying McDonald's and all those kind of things. It's an interesting concept. Is he outdated, or what do you think?
Yeah, I think more the point he's trying to make there is not getting caught up in the latest fad that's coming out. Okay. So let's take AI, for example. Is AI going to revolutionize the workplace and the world in general? It kind of seems it might get there at some point, right? Mm-hmm. And we have lots of clients, we have the discussion, and they say, hey, I think AI is going to be a big thing. I want to invest in that. I was like, I agree. Tell me the company that's going to be the successful one, and we'll invest in that one. Because I mean, I don't know. There's 100 companies we could choose from, and what I would predict is that 5 or 10 years from now, out of those 100 companies, there's going to be 4 or 5. The other ones got bought and merged, or they failed. So you got to be able to pick the right one, right? So is it better off that you buy a fund instead of a company? Maybe you buy an AI fund. But I think getting back to what he's talking about is it's buy the stuff or invest in the stuff that you understand, that you can tell the story on. Mm-hmm. Bitcoin, if you bought Bitcoin several years ago, you're doing very well. But there's been plenty of people that have lost money in the meantime with Bitcoin when they bought it high and it took a dip and they sold it. It's really about not following the fads and staying the course with your investments. I couldn't agree with him more.
Yeah. Charlie Munger, who was, of course, his right-hand man, mm-hmm. and Warren Buffett have come out and said, I wouldn't do Bitcoin. I don't understand it. And so he's been an interesting guy, and I'm sure he will be into the years to come. What odds are better, going to Las Vegas and playing a little blackjack, or putting money in the stock market? Right now, it's a little iffy. Mm-hmm. All right, in Las Vegas, I can tell you, and you know this, the house always has the edge. Your chances of winning at table games or slots are 3 to 12%. If you invest money in the stock market, after 1 year, you have a 66% chance of a positive return. After 5 years, a 76% chance. And at 10 years, an 86% chance. The big difference here, of course, is if you win in Las Vegas, you get paid right away. Mm-hmm. But if you win in the stock market, you have to probably wait until retirement before it finally pays off, which is not nearly as exciting. So let me talk to you a little bit about risk. Sometimes a boring 5% is all we need. And sometimes, looking at playing at 3 to 12%, that doesn't sound too good to me. The stock market starts to sound a little better. But talk to me about where your clients land on the risk scale. Do they have 50% of their money in the market? 60, 70, 30? Where is a happy place for your clients?
Yeah, and you're not going to like this answer, Randy.
Okay.
It depends.
It depends. Right? There it is again.
Because if we have somebody who comes in and both spouses are having Social Security and maybe they've got a pension, right? Okay. And that's meeting their retirement needs, and they can afford to get more aggressive with their investments, right? They've got a long time horizon. They don't need to drain that. We have other people that they are going to be relying on those investments in a very short time frame. Even though, as we can see from here, right, almost 7 years out of a series of 10 years, almost 7 years, the market will be up, right? If we're 66% chance, it's roughly 7 times out of 10, we're going to have the market going up or even more. There's still those down years that are going to happen. So we really can't afford to be exposed more to that. You really started to hit on it a little bit, is that in Vegas, you go out and you play. I mean, all I really play in Vegas is craps. Okay. And I'm not much of a gambler. I take a couple $100. If I've got it when I come back, I've got it. If I don't, it was the price of entertainment, right? And a couple $100 does not go far on a craps table anymore. Mm. And you put your money on that 6 and 8 or 7 or whatever it is you're playing, mm-hmm. and it hits, and great, you get paid right away. Mm-hmm. But the stock market, you can refresh your screen by the second and see your account balance going up and down. I almost wish there's some way we could say to clients, hey, this is the deal. You log on once a year. Save yourself a lot of pain, right? Log on once a year. Look at what your balances have. Because, take the example of what we've just been through over the last few months, right? Those big down days, of course you're looking at it. It's like a car wreck. Like you can't not look at it, right? When it's going down like that. If you had just let it go and then taken a look at it beginning of May, yeah, you're still down a little bit, but it's nowhere near what you would have been feeling before, right? And we've talked about the issue of your investments in the markets are priced like nothing else that you experience in life. None of your other assets are priced the way this is. There's a price next to your portfolio that's made up of all your investments, and constantly it's updated with what was the last sales price, what's the bid and ask, and it's telling you instantly. Your home does not have a ticker symbol above it with the price changing every few seconds based on what somebody will offer you for that house right now. Is your house value jumping around all the time? Yeah, it is. Actually, it is. You just don't know it because you're not there trying to sell your house every second, right?
Right. Gotcha. You know, I was reading a really fun article in Business Insider, and it was the story of Rich Colorado. What a great name. Rich Colorado, he's out in California. He's 87 years old, and the headline read, "I'm 87, I never planned for retirement, but I'm doing great." And so the story of Rich is he's very, very active. He bowls 3 times a week. He takes classes at community college. He teaches kids chess. He teaches kids bowling, all these different things that he does. And as far as his financial world is, he said, find me some CDs for 5% and I'm just fine. Now, he may have had a hard time with that a couple of years ago, but lately not so much.
Yeah, I was saying now, not a problem.
Yeah, what that meant to me is all these stories about you need $1.8 million to retire and you need all of these big gains in order to stay in retirement. It's just not true. He's a very frugal guy. I'll give him that. He doesn't have a car anymore. He doesn't drive anymore, but he's still very active. But 5% got him what he needed in retirement. And I think there's a little bit of a lesson there for most of us, don't you think?
Yeah, it's changing the mindset. Now, he's 87, so I'm assuming he's been retired for a while.
22 years, he said.
There you go. He's been retired for a while. So he has made that shift. I don't know how long it took him, but he has made that shift in his mind from going from work life and everything that goes along with that to transitioning into retirement life, going through that life event. We talk about this all the time. You're working. The whole goal is build that 401k, grow it, get that match from the employer. We've got our paycheck coming in. This is great. We want to get as much money as we can in that 401k, grow it as much as possible. We can afford the volatility. We can afford the risk because we're still working. We've got our paycheck coming in. We're not drawing down on that money. As soon as you retire, things change. Now we've got to make a paycheck from those investments that we've made, from that 401k that we grew. Do we want some growth? Rich wants a bit of growth as well, right?
Yeah.
But he's 5%. Saying 5%'s okay for me, right?
Yeah.
We still need a bit of growth, but we really can't be sticking our neck out too far like we used to because time's not on our side anymore. He's figured it out.
Yep. And we would love for you to figure it out as well. And if you need help figuring it out, that is why we are here. Jay Kirkwood at Secure Financial Management. You can find us at retire210.com. And when you go there, go to the bottom of the page. There's a place for you to put a little information and then even a place for you to put in what you're interested in talking about. And we'll reach out to you and talk through it, see if we're a good fit. Maybe we sit down in the office and do a little math on your retirement. You can also call us. It's 210-985-6200. 210-985-6200. Well, as long as we're talking about your income and things like that in retirement, one of the places that people build income, and over the last couple of years, baby boomers have been coming in mass in record numbers and using annuities for their income in their retirement. But the question that this particular article asked is when? When should you purchase an annuity? Should it be 3 years before you retire, 5 years before you retire, right on the edge of retirement? So they asked that to Elizabeth O'Brien, who works at Barron's.
You know, a good time to buy if you're going for a fixed annuity is right when you need it. You know, in retirement or approaching retirement, you calculate your expenses. You say, okay, I want my essential expenses to be covered by Social Security or an annuity. That's a common thing. So here's how much I need. Let me go buy the annuity. You don't sort of buy it way in advance.
So I've heard pros and cons on both of that. Come in early, let that money percolate for the insurance company, and do it that way, or come in and buy an annuity right before you retire, and sometimes that's a different kind of annuity. What would you say to this whole topic here?
Yeah, where I agree with her is on the side, and this is really kind of getting into a retirement planning discussion, is how much income do we need that's not dependent on the markets? So now we're talking guaranteed, right? Which means we're out of that investment world to meet our regular expenses. And will Social Security be enough for most people? No. So what do we need to add to that? All right. This is where I would disagree with her a little bit on when to buy one. Because I can tell you, you mentioned at the beginning, these last few years, there's been record numbers of people buying annuity for income. Okay. And there's a reason for that, because that's what we've experienced with our clientele as well, is that the payout you are going to get on that annuity, that income from the annuity, it's tied to what interest rates are doing. So what's happened in the last few years?
They've gone
Interest rates have shot up, right? So it's not to say that we haven't done these types of planning before in the past. It wasn't a recommendation from us. If someone came in and said, this is what I want to do, all right, you understand it, as you wish, we'll take care of it. But more and more, the recommendation has been coming from us as these payouts have gone up. And I'm not talking a little bit, Randy. It's significant. It could be 60, 70% more income than it would have been with the annuity rates in 2020, 2021, even parts of 2022. It's funny. We get more and more people coming in saying, I've kind of investigated this annuity. I really like it. I'd like to talk to you a little bit more about it. But then everyone tells me that annuities are bad and I shouldn't get them. But it seems like I like them. And I say, well, look, it's all about understanding what it really is, right? That's what the key is. The people that get burnt by annuities, and look, we get at least one or two a month in our office from another advisor, and they bring in this old annuity and they say, well, I thought I understood this, but I tried to use it and didn't really do what I thought it was going to do. Yeah, you didn't understand it. It was a bad recommendation. The people that really get the value out of the annuity is when there's a strategic placement for it in the plan and they understand the role that it plays.
Is it, to answer her question, should you go 2-3 years before retirement or right on the edge of retirement? Because there is something called an immediate annuity, which people will use. And then there's fixed annuities, fixed income annuities, variable annuities. There's a lot of different kinds of annuities. Yeah. What about the timing of it?
The same way that Social Security will go up the longer you delay it, or you could use the word defer it even. It's the same with the annuities, at least the ones that we use, right? If I just had a meeting with a lady before I came to meet with you, and she's going to retire in 2 years. And we showed her, hey, look, this is something that you can consider. It's guaranteed income. You don't have to worry about it. And if you defer it to a couple of years, your payment goes up by something like 20%, right? So there can be a lot of value. Now, the reason that the immediate annuities are used usually is because there has not been planning done ahead of time. And now you've arrived at retirement and like, hey, I don't have time to defer this annuity. I need income now.
I see. Yeah. Okay. Well, there's a lot to talk through when it comes to replacing your paycheck in retirement. An annuity is one thing that you might look at. I mean, there's structured notes and there's dividend-paying stocks and there's pensions. There's a lot of different ways to get paid in retirement. This is just one of the tools in the shed, and I would think that you'd want to look at all the tools in the shed to see if anything's right.
And make your own decision. Get educated on them.
Yep. That's why we say do the math on your retirement. Let's figure out what you need and how we can get you there. Here's our number and here's our website. It's 210-985-6200 for a free meeting with Jay to sit down and kind of assess where you are right now. What have you done for retirement? What have you saved? What's your tax liability? Is everything in a 401k or do you have other things elsewhere? Whatever it is, let's sit down and talk through it. You can find us online as well at retire210.com. That's again, retire210.com. Scroll down to the bottom of the page. You'll see our process right there. You'll see Jay's book right there as well. And you'll also have an opportunity to put in a little information there so we can reach out to you and start the conversation about your retirement. And remember to have this podcast delivered straight to your favorite podcast platform by hitting like, follow, or the subscribe button. Thanks again for listening to Clear Skies Retirement, and we'll see you next time. Investment advisory services offered through investment advisory representatives at Secure Financial Management, a registered investment advisor. Exposure to ideas and financial vehicles discussed are not designed nor intended to be applicable to any person's individual circumstances. It should not be considered as investment advice, nor does it constitute a recommendation that anyone engage in or refrain from a particular course of action. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Secure Financial Management is licensed in your state, please contact their office. Secure Financial Management is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Wholesalers Insurance. Jamin J. Kirkwood, Texas Insurance License number 1421850.